We're going to continue the conversation, our last conversation before our lunch break, with Caroline Malcolm and Eric Anziani on prediction markets and the machine economy. Please give them a big round of applause.
Well, I think we did everything except work out how these mics work backstage. So, Eric, it is a pleasure to have you with us, President and COO of Crypto.com. We're going to have a really interesting conversation about the world of autonomous AI and the machine economy, prediction markets, which we've just been talking a little bit about, and very hot in terms of media coverage at the moment. I think Crypto.com has a very interesting story to tell in that regard. And also, of course, the rise of tokenization and multi-asset integration into platforms like Crypto.com. You've been with Crypto.com for a bit over 8 years, and I think your title of President and CEO tends to undersell a little bit kind of the scope of your role, if I've understood correctly. It's growth, sales, data, strategy, research, anything else I'm leaving out there?
So first of all, I'm very excited to be back in Paris for the Paris Blockchain Week Summit. I think it's my 5th year now. It's always great to be back, whether the market is hot or less, the bear, bull. There's still a lot of excitement, a lot of interesting people, so always good to be back. I'm very lucky to be part of the Crypto.com journey. We have an amazing team I can rely on and work with. So it's been tremendous. When I started, we were about 20 people. We're more than 2,000 people now, and it's been quite a journey to get 150 million users, trillions of dollars of volume. So I'm very, very lucky to be in that position and to be able to contribute to the ecosystem.
So I want to talk a little bit about your journey as well, because I know you've spent some time in different markets around the world, and I'd love to hear a little bit about how those regional differences play out in terms of the different offerings that you have. But maybe if I can start with this idea of sort of tokenization, because I think the integration of BlackRock's Biddle Fund as trading collateral really felt like a little bit of a landmark moment. It was sort of when you really saw sort of institutional finance meeting on-chain infrastructure and capabilities. For Crypto.com, what did that deal represent strategically, and what do you think needs to happen if we're going to hit those predictions we hear about, that we're going to have 16 trillion of on-chain tokenized assets by 2030? Because as you said, we've seen the market go up and down, and I haven't checked it this morning, but I'm sure we'll get a sense from the crowd about where we are today. But there is certainly over time a trend towards kind of greater adoption.
Definitely, I think it was, I would say, a pivotal milestone for us. This partnership that we did with BlackRock to integrate Biddle, their money market funds tokenized asset, in our journey to bring financial assets on-chain. And we're doing that because we believe with the 24/7 nature of a blockchain, its global nature, its cross-border nature, we can broaden the access and the efficiency of any financial assets. And by that also, we are able to give people more opportunities to grow their wealth, which is our main mission at the end of the day. So when we integrated this asset, it enabled mostly institutional players and pro traders to have a money market fund tokenized as collateral, so they can have utility to trade margin and derivatives and earn yield at the same time. If we look at this tokenization journey, right, we saw that trend emerge, that blockchain was not only for movement of native assets over the internet, like Bitcoin or Ethereum.
Yep.
It was also used to move any financial assets across the internet. About 3-4 years ago, this really matured for us. And we looked at it and we say, okay, so how can we help that transition and bring this $16 trillion of asset into the blockchain environment? First, like anything at Crypto.com, we try to look at what's the foundation we need to have so we can accelerate this trend. And foundation for us always comes with compliance and security. On the compliance front, when you look at tokenized securities, well, it is a security. So if you want to distribute it, you actually need a broker-dealer license in most countries, or a derivative license, or investment license. So we went about and acquired licenses across the globe, starting with the US, but also in Europe, in Australia, in the Middle East, in Abu Dhabi, and many other countries. So we could actually distribute those tokenized securities.
Could you timestamp that a little bit? Sort of, there's a lot of things always happening in crypto, but give it a sense of where we are in terms of the timing that you started doing that licensing activity.
Yeah, I think that 2.5 years ago, and this is especially we want to offer this globally, so it does take some time. Now we have most of the licensing set up, so that's done. Then the security part is you want those assets to be freely tradable on-chain, and you want it on a permissionless blockchain. That's very important, otherwise the use case is very limited. So you need to design the smart contracts right. You need to make sure, especially in securities world, you have corporate actions that can be reflected in the token when things happen to the stock splits, and all this stuff. So we spent some time to design that. It's ready. And we are partnering with Kronos to blockchain to release that. So now it's about distribution. We started in the US. A year and a half ago, we were the first crypto platform to launch trading of equities. That was our first step. This week, we just announced rest of the world asset, mostly commodities and stock index, now is fully available on our professional exchange platform. So it's trading of gold, of silver, of natural gas, of oil, and some SPY and other type of indices. And our goal is to bring all financial assets, spot and derivative, across all our product suite globally. That's what we're aiming for.
Wow, that is quite some ambition. And I think, one of the areas, and you mentioned it there, sort of making those sort of previously less liquid assets available 24/7 and take advantage of the technology in that regard. But at the same time, that is happening in the kind of what I'll think of as sort of, you've got the pure crypto world, and then you've got the sort of tokenized securities world. We're also seeing the rise of prediction markets. And as we were just discussing, little known fact, but Crypto.com was actually the first to offer prediction markets, well before the kind of storm that was Kalshi kind of hit the headlines. They're really described as, I guess, the new information infrastructure, more accurate than polls, scalable. I know that you started off, running them in the sort of, or that's where you really started to gain traction in the political space. Do you see those trends of tokenization and prediction markets as sort of crossover areas, or are those going to be two quite distinct marketplaces? You sort of mentioned, and on the interface, you're going to have the sort of the equities, you're going to have crypto, prediction markets. Is that really ultimately lines which are going to blur over time?
So if we look at both tokenization and prediction market, I think what they're doing is helping democratize access to financial markets, both of them. We talked about tokenization, which is basically taking real-world assets and putting it on-chain. When we look at prediction market, it's about turning real-world outcome into tradable signals. And as you said, a lot of these signals are going to be the source of truth and the source of information for people in the future. They are usually more accurate than polls, 30% more accurate, because people have skin in the game. So you get to the truth faster. And that's going to be extremely useful in the investment world, but everywhere, in the news, in social media. So I see this industry not only being in the deca-billion, but probably $1 trillion industry, the prediction market side. There's a few things that still need to be put in place to work, but it's going to be huge, and it's going to be everywhere. It's funny you mentioned about 4 or 5 years ago, we acquired a CFTC-regulated venue that was doing primarily options, which was a little bit like prediction markets. But really, when the space picked up with the first US election, the political election, and that market really emerged, we decided also to try to help expand the space. So we were the first company, actually, to certify sports contract, which is today about 60% of the total market.
Wow. Okay.
But we see it's not only a sports game, it's cultural, it's economics, We just released this week the ability to hedge and predict earnings. We're going to look at the EPS value, and we're going to look at post-trading activity after the earnings announcement. I think it's a great tool for investors, for company to hedge against different outcomes. There's so much we can do in the space. The approach we've taken, similar to tokenization, is how do we make sure we have a robust framework that we can provide to investors so they have protection, they know we have rules to monitor market integrity. And naturally, the CFTC regulated framework was the one that came to mind and the one that we leverage to offer these. And they're basically swap contracts. That's what they are. But you have the oversight of the CFTC, which I think is critical if you want to get this industry to maturity and get it to $1 trillion business.
So I feel like on the crypto side, we've just come through a fairly bruising 8 or 9 years on the regulatory front in the US, and certainly issues are still not resolved, as we know. Tokenization seems to have had a smoother ride, if we think about tokenization of securities. Not a smooth ride, but a smoother ride. Prediction markets, though, seems to have caught political attention and the public's attention again. Do you see the sort of regulatory issues that might arise in relation to prediction markets and general public concern about this space? As part of also, I guess, there is a changing of the wind, if we can call it that, in terms of people having different views on, the role that markets should play in the economy. Do you see yourself having to gear up for sort of regulatory kind of battles in relation to prediction markets as well?
Yeah, very likely. It's ongoing today, and I think it will take a few years for at least in the US, to get full clarity. At the end, I think the principle doesn't change. Those are financial instruments. They're swap contracts. I think we'll get to the right outcome, but it will take some time. And as industry participants, we'll try to contribute, and we've been working very closely with the CFTC and other participants to make the case that those are useful and typical financial instrument you would need in an ecosystem to function fruitfully, right? So this will happen. It's going to be a journey, a little bit like in the crypto side. And it's not only in the US, there's also other jurisdictions where we're going to launch this product, and I'm sure there will be some debates, some conversations. But at the end, it's a financial instrument. It's not something completely new. There are frameworks that are out there that we can leverage, and maybe we need to improve them, make them a little bit more fit for purpose. But directionally, I think it's just a new space that we can work with the traditional rules. Right?
It's really interesting you mentioned earlier about prediction markets being better than polls in terms of being able to actually determine outcomes of events and give signals about those events. And it's interesting because at the same time, we also have the rise of sort of AI agents and this question of, things like Maltbook, where we have AI agents coming together and discussing sort of the future of humanity and themselves making predictions about where things might go. I'd be quite interested to hear, how do you see the agentic world kind of interacting with prediction markets? Are they going to be consuming those signals from the market? Is that going to be sort of another layer of complexity in terms of affecting the market dynamics? Or how are you thinking about where agentic AI fits into, your kind of what I can call your traditional business and these newer areas of your business?
I'm glad we're talking about AI. I was a bit worried we might miss this trend. First of all, I would say that there's been a fundamental shift on how people will interact or interface with any services in the future, whether it's for investment, whether it's for commerce, for travel, for health. The interface of the future is going to be an AI agent. And that's a huge shift. It means maybe in the future, there's no thousands of apps. There's just one app that you talk to every day that is your AI agent, and maybe he has a bunch of sub-AI agents helping him out, but that's going to be the interface of the future. So as a business, you need to think, how do you prepare for that, and how do you benefit from it, right? And I think the first thing you need to do is make sure your suite of products can talk to an agent. If we look at a professional venue, you already have some APIs and things like that, but it's not already the case on maybe your retail platform and some other product that you're offering. So the first thing we did when we saw that trend coming up is make everything accessible through API, right? In a safe and secure way. That's very important, especially in the space of AI agents. And the second is, how do you explain to the AI agent how to use those APIs and understand natural language to process orders? So then you have to build skills. So we built the skills file for the AI agents to be able to use those APIs. I think our skill is like top 3 trending in the industry. So people are actually, agents also are actually using it. So that's the first 2 steps. Then you need to make sure things like OpenClaw or Anthropic Claude or ChatGPT, OpenAI are actually able to use those. You build those MCP connections, and people in those platforms can actually use your services. And you need to differentiate yourself so they pick you versus others, right? Yes. Knowing that the interface of the future is going to be an AI agent, it's also important for us to see whether we can have a share of that distribution layer at the top.
Yeah.
And that's why we announced just 2 to 3 months ago the launch of AI.com, which is going to be that interface where people come in, have the self-learning agents that can help them do everything for work, for personal, for investment. And we want to have also and propose a value-added solution for people at the top of the funnel. Yeah. So we're thinking across the entire value chain, but this is a huge shift. And you'll be able to predict, you'll be able to trade, you'll be able to invest through this agentic interface.
And I mean, this idea of that you really need to own the customer relationship in that regard is going to be really critical. And I think one of the early instances we saw of this fight being played out was the Perplexity Amazon case, where Amazon was trying to block Perplexity's agents from operating on their platform. When you think about, like, what are the elements that you think you need to control in order to be able to control the customer relationship? For example, is it going to be those model providers who own that relationship, where the UX is still relatively basic, you'd probably have to say, and it's much more sophisticated over in the finance side? And also, is this going to be the start of really bringing the super app trend to the West? Because we've seen it, and I know you're based in Singapore, and we've seen it take off very much in other parts of the world. That is not the case in the West, where you have, your ride-hailing service, your financial app, you have your your social media, and it's all in one place. Is this ultimately going in that direction? And I mean, because that seems a really sort of fundamental shift. You've seen in Asia in particular, you've seen finance sort of being white labeled into these super apps, which don't start as sort of finance native. And in the West, we keep those two quite separate. Is that likely to change?
If you look at the future, this super app model for me will compress, and you'll just have an agent that can do everything, right? So the agent becomes the super app. You don't need to have so many different icons, right? You just have one person. I want to do this. I want to book a taxi. I want to book my travel. I don't need to have a super app anymore. The agent is the super app.
But do you think that means you have to get into the hardware business? Because if I'm going to sort of own the machine, I need to hold the thing, and I need to control the operating environment on which the sort of agent kind of starts its journey.
At the end, if you want to be in control of your destiny, you need to own the relationship with the customers. Even in prediction market, I mean, we are today the platform of choice for anyone who wants to launch prediction markets. So we have DraftKings, we have FanDuel, Fanatics, we have Underdog. Many players are already using our platform. But in the future, we also want to own that relationship. And we just launched a couple of weeks ago a brand called OG.com. That taps directly into infrastructure, but where we own the customer relationship. Same in the agentic world, we want to own that relationship, and the only way to do it is to have the product, right?
So, I mean, if we think about coming back to agents for a moment, rather sort of the broader ecosystem, if AI agents can trade and transact and sort of self-improve across these decentralized networks, what do you think that means? I mean, who are your customers of the future? I mean, it's sounding like they're agents, they're machines. They are not humans. How do you think about how that sort of really changes everything from how you capture the customers to begin with and how you market to them and how you keep them within your ecosystem?
It's a huge challenge. First, you need to make sure, even if you don't control the interface, that there's a way for people to onboard in a regulated manner in a control environment, because you have obligations as a regulated entity, to KYC customers and to make sure there's controls post KYC, right? So you need to make sure, even if it's an agent doing that they are doing it in the right way, and you can demonstrate that to regulator, right? But at the end of the day, I'll come back to it. The key to be in control of your future is to own the customer relationship. So we'll strive to get a decent share at that and have products that allows us to do so.
How active do you think the human consumer will be in making those decisions, or will it more be about setting parameters, but it will ultimately be the agent itself who is making that decision of whether I, talk to crypto.com or I talk to some other provider out there?
I think it's going to be a journey. We also probably need to have a regulation that evolves with it, because it's a completely different concept, right? Does the agent has an investment license? Can they make an investment recommendation? Who is responsible if something goes wrong, right? So there's going to be a lot of experimentation. We don't know where it's going to land. I think we need regulation also to evolve to support this new use case. But it is an agentic future. There's no way we can stop this. And agent will have a big say in terms of which provider they pick and how they invest, predict, and support people's life and journey. So we have to make sure it's safe. We have to own some of that relationship to provide the best experience and make sure the rest of the ecosystem evolve and adapt to this new reality.
Eric, final question is really about how, sort of coming back to sort of the geography and your business today. I know you have a very significant proportion focused on the US markets. As you see these other innovations kind of take place, so tokenization, prediction markets, into sort of this agentic-enabled future, where do you really see that taking off, and how does that compare with where your business kind of focuses today geographically?
Well, we see it moving quite fast in jurisdiction where, sometimes there is a very deep traditional financial network environment, and everybody now knows that it's happening. We need to be there. We need to move a lot of our assets and technology on the blockchain so it's better service for our customers. Some of those jurisdictions in Asia and Europe are already pushing for that. There's also jurisdictions that are forward-thinking, more innovative, like in the UAE. We are working in Abu Dhabi to offer some of these products in Dubai and other part of the GCC countries, right? So it's going to be a mix of old traditional financial players that realize that they have to do something to stay relevant, and looking forward-thinking jurisdiction that want to innovate and capture a share, because it's kind of open right now. People have been working on it for the last 2-3 years, but there's no clear winner. There's no clear standard either. So who's going to be able to push forward and get concentration, liquidity, will set the terms.
I mean, I'd love to dive into also, we often talk about the US and Europe, and we stop off in the Middle East on the way to Asia, but we talk very little about Africa and Latin America. We didn't have time to cover that today, though, but I'm sure that people here can grab you afterwards if they'd like to, because this has been a really fascinating discussion. Eric, thank you for sharing with us.
Welcome to Signal Week.